Hello guys, welcome to another video. In this video, we're gonna look at my playbook, what I see, how I execute the trade, how I analyze from the higher time frame, probably weekly or daily, depending on the structure. So I'm going to give you the breakdown. So I hope you have one or two things to learn from this video, and if you find value in it, you can share, subscribe, and also like. And if you also have any question concerning to this video, you can drop it in the comment section. So let's dive into it. Um, this is Euro USD daily time frame. That's where I'm starting my analysis from. And step by step, I will walk you guys through it, the mindset behind it, and how I perceive the chart. So, and as I used to say, chart is all about perspective. There is no one way to getting it right. It's all about individual perspective. And if anything you perceive in the market works for you, either you call it strategy or not, just stay to it because it will definitely keep working. So I'll start by showing you how I do the analysis from higher time frame and how I will take it to the entry point. So let's say we had a bullish structure like this. Let's take this for daily time frame. So, and as you can see in daily time frame, let's say this is daily time frame D1. So as you can see, we want to see the intent, the push, the exhaustion, and the correction. But in terms of structure, structure is what will give us the higher time frame direction, the long time perspective of where the market is going to, and then the lower time frame and the internal structure will give us the understanding of what the market is actually doing currently. So this I want to use this structure to be higher time frame structure. So let's say we have something like this break of structure, daily break of structure, and as you can see, we have daily break of structure. When we have daily break of structure, what are we supposed to first establish? We are supposed to first establish our low. This is our daily low. Then establish our what? Our inducement, which is this point. So let's say in a situation whereby markets refuse to come here and market creates another push up. So it means that this daily inducement will be shifted to this level. Remember, this is daily structure. So what next are we supposed to do? We are supposed to mark our extreme order block first, which is our POIs, and our decisional. This is our decisional. Remember, I said this is low probability. But for the sake of this video, I want to stick to one. I don't want you to get confused. So, and the same apply to when markets also hold on this decisional. It's also a low probability, but doesn't mean it's not going to hold. So it depends on how the market reacts to it. So let's say we are dealing with this and then markets come here, do something like this in daily time frame, and we had a push down, and like this. One thing that normally happen is when market is coming to this extreme, this level is likely to respond, is likely to react, but it's not just going to react to push the market to break the structure. So sometimes markets will push up, use this level as a counter trade inducement, then market will now drop. So in this for this video sake, now we had a structure complete and market is already at our POI. So let me make it. So let's say this is our POI and this is our low, then this is our high. So now it means that we have a trading range. First thing is market is our POI in daily time frame and we have a trading range. So our trading range is from here, from this low to this high. For this market to continue moving in bullish direction. So for it to continue moving, it means that this is our trading range. We are not looking for sell, we are only looking for buy. So anything that take this market below here will give us change of character. But for this video, we will assume that the market is continuing in the direction. So this is what I want to first establish. I want to first establish where the market is coming from and where the market is going. And as you can see, we have the low and we have the high. This is our trading range. So this is what I want to see on daily time frame. Once I can establish this on daily time frame, all I need to do is to go to my lower time frame, 1 hour, depending, because sometimes market will not follow your 1 hour, but the ideal time frame to go through is 1 hour. Then when the market is now going, then you have to follow it up with 1 hour or 4 hours, or 3 hours or 2 hours. But for you to understand that, let's say market get to this level and start reacting like this in 1 hour. In 1 hour. Remember, we are buying from this level to this level because we understand that we can't execute this trade in daily time frame, so we have to go to the lower time frame to execute it. 1 hour. So it means that this is the time frame that market is responding to. So we now use 1 hour as our entry confirmation to enter. And if you discover that market is not really responding to 1 hour and the same setup is only showing up in 4 hours, then you execute using 4 hours. That's all you need to do. You execute from here to this level. So that's exactly what we are doing in this video. And remember, even if the market is going up, it's not just going to flash up. Market will take its time to create both the internal structure. Sometimes you can have, in daily time frame, market will be doing this, will be doing this, will be doing this in daily time frame. But you are not going to use daily time frame to enter. In this place, this can be your 1 hour or 4 hours entry. This level can be your 1 hour or 4 hours, 1 hour or 4 hours, 1 hour or 4 hours. This level, if you're using 1 hour, you are likely to be stopped out. But probably market come to to 4 hours, or probably market do daily internal structure. So if you have a win here, a win here, a win here, definitely if you have a lose here, and you understand this concept, then it's easy for you to reposition again and continue buying to the upside until market break this structure. So there are things that market do in the market, and there are things that the market do that, for you to understand how to position, you have to know how the market behaves. For example, let's say this is the daily time frame and you buy maybe from 1 hour to this level in lower time frame, and you see market take out this daily, which serve as probably change of character because we mitigate the POIs. Market can still use internal daily structure to come and create a structure for you. Use this as a internal structure, then push up. So there are a lot of things that you just have to know. But for the fact that market is has mitigated this level, all you need to do is to just position for buying. If market give you sell signal, you are not doing it. You go to buy, you can use which of your time frame, whether it's 4 hours, whether it's 1 hour, whether it's 30 minutes, but it has to be in the direction of this higher time frame. So, and I still want to show you guys something. Let me show you something how the market actually behaves. So I'm still using daily time frame as as an example. Let's assume that this thing for you people that like taking counter trade. In this case now, you can see that we had this level inducement, but market push up and do what? Break this level. But you can see that there is no inducement. For you to confirm this level as your new low, like this, for you to confirm this level as your, you need the market to create another push up. Then this will now serve as your inducement. But in a situation where you have this, it means that this is the low that the market created and this will serve as your new inducement. So it means that you are shifting this inducement to this level. The structure is not yet complete. So then that's when you will now see the market coming down. Some people will be trying to buy here. No, it's very weak. Market will use you as an SMT. The market will flash down because this is exact level that the liquidity is resting, then market can now mitigate this level then before you see the continuation. So these are the stuff that you need to pay attention to. I would not want to go to the concept of counter trade, whereby when the market is coming here, you can capitalize on it. I don't want to go into that. I will do another video to explain how you can capitalize on counter trade on the pullback or the pullback. So you can see this is the overall direction of the market like this. This is the overall direction. So if you're selling down, there is a concept, there is a perspective that you need to use to look at this market for you to be able to capitalize somewhere like this. Maybe you take a trade and sell to this level, because this will serve as, sometimes this is low probability and it serves as smart money trap. So all these things, I just want to give you guys the background to it. Remember what I said, we go to higher time frame, which is daily. And if you're also someone that use weekly, this is the same thing you look out for in weekly. Then you go to 4 hours, you go to your 1 hour, or whichever time frame that the market is creating structure for you, then you can execute your trade towards to this direction. So this is the first step that I want to see in the market. The second step is the lower time frame confirmation. So I will take you straight to the chart and explain and probably check and see what the market has been doing in respect to this explanation that I just gave. So let's look at it from this angle. So this is GDP USD, and I want to map the structure, but I don't want to start from this back. I just want to look for the recent. Let's start from here, which look kind of recent to me. So you can see the same process. We have this GDP, this USD JPY. So you can see this break of structure. You can classify this as break of structure. So if you're using daily break of structure, why? Because market had a liquidity inducement that we can call our inducement here. You can see. So, and it looked like market respects this extreme POI. So this is exactly what I'm saying. Once you see that market is respecting your extreme, market get to your POI, you can see that this is the first break of structure. Then market created another one. No break of structure here. All these are just internal move. And you can see market respected this level. And from this level now, you can start swinging to 1 hour and 4 hours and keep buying to this upside. And you can see until the market gets to this level. So, and if you want to know from this move, 1,200 pips, you can easily have some decent trade. So let's go on, and we have a break of structure here. What else are we looking for? We are looking for, after market break this structure, we are looking for inducements, and as you can see, I want to take it slow. As you can see, this is the direction. This what the, sorry, let me use this drawing. So you can see small pullback here, small pullback here, small pullback here. You can, in case you are confused about how I get my pullback, you can watch the video how to identify valid pullback. So, and you can see this is where we are able to identify the last POI and last pullback that the market did. So put our inducement there, and then what else are we looking for again? We need to look for our extreme POI, and we need to look for our decisional POI, which is low probability, which is the pullback, the POI below your inducement is the first one, and the second one is the extreme. And you see how nicely the market reacted from this angle, from this decisional POI, and did what? And give us break of structure. So look at this now. In this case now, you go to your 1 hour and start looking for confirmation, and you continue buying to this level. And by that, this will be about, let's say, this space will be about 800 pips. You should have one or two decent trade there. So now it means that this extreme POI is not valid for this setup again, because market has created new structure at the top. So you can see anything below here will serve as our what? as our change of character. Look at this. This is not about whether I'm right or I'm wrong. This is just about the perspective, and it works. So, and if you think there is one almighty perspective, there's no almighty. Everything works. It's all about the your psychology and the kind of person you are that is handling the strategy or the concept. So you can see in this case now, what are we supposed to look out for? We are supposed to look out for the last pullback that the market did, which is here. This will serve as our inducement, and then we do not have decisional POI, which is low probability. So, and is there any no extreme POI? This one has already been mitigated. So this one has already been mitigated by this. So there is no POI that we can buy from here, valid POI that we can buy from here. So now you can see market gave us change of character. It means that market is telling us that it wants to go down because we had change of character. It's not continue this bullish momentum again. So the process remained the same. After we had change of character, this is the last high that the market, last pullback that the market created. And as you can see, we are expecting the market to come there, probably come to our extreme order block or order flow. This order flow. So this is our extreme order flow, and this is supposed to be our decisional order block. So we're expecting this move to come, but unfortunately, market created another move. So we're shifting our inducement to this level. This is the major inducement, this is the minor inducement. So, and this is where the last pullback lies. Because if you watch clearly, you can see that this is what the market did. Market did like this. It did push down to this candle, then push back, then now come. So that's where we are able to use the level as our inducement. But based on my experience, I understand that this is the major liquidity, because this is the pullback that happened when the market majorly moved back to this level. So, but I understand that. And now this decisional POI will be shifted to this level because this is the other block that rests above our inducement. And you can see clearly market respected this level, reacted from it, and do what? And fail. So now that we have this scenario, we understand that once this level fail, the next target that the market is likely supposed to come to is this level. So then once you establish that this level has failed, you can systematically go to your lower time frame and buy to this level. This is what counter trade is all about. Sure you understand? And look at it. This is our low. This is our low. Then this will serve as our high. This is our trading range. Like this. This is our trading range. Look at this. This is a lot of distance. You can see this is about 2,200 pips. So, but remember, market will create its drama in between. It will form daily structure and so on. So, but we are waiting for market to get here before we can say we want to continue selling. If this sell is going to hold, or if the market will also change character to the upside. So, and as you can see from what I explained, once this level fail, there is a sign. Once this level fail, is a sign that market is likely come supposed is likely to come here. So what are we supposed to do? We wait for the market to get to this level, or we take the internal structure. So, and as you can see, market did what? Remember, market created daily internal structure like this. This is daily value pullback that the market did. You can see market did this. Market created this drama and start flashing down, start flashing down. So, but the fact is, for the fact that this level is our low and market refused to break below this level, is a sign that, let me give you an instance. Let's say we had a structure like this. Let's say we had a structure like this. We had a structure complete like this, break of structure, and market creates inducement like this. This is supposed to be our extreme. and market create another so this will serve as an inducement, this will serve as our decisional POI. And you see, when something like this happen and this level fail, there is tendency that the market is coming here. And if the market refuse to break below here, it means that market just use this level as a liquidity and market is likely to go up. Or if market sweep this low without closing below here, it means the market is still trying to come back here. And you can see market will definitely go here before we will now see major move to the downside. So this will now be our respected POI. This will now be our break of structure. Then this will now be our new high that the market created. So these are the things. So all these are internal structure. These are drama. You can still see trade, but you have to understand that this is your high tension. This the trading range. All these are the trading range that you are coming to. And the market is either market break below here without without mitigating the market break below here without mitigating your what? Your extreme order block, or market is still going back for that extreme order block. These are internal structure. So when we started last year, around last year, market was somewhere here because I was trying to buy here, somewhere here. I was trying to buy here and I had a loss. So I feel that since the internal structure has been violated, probably market is likely is coming to break below here. But when market got to this level, I see that we started having consolidation and rejection. So that one prompts me to start looking for buy back to this level. So, and as you can see since that time, so when market got to this level, I mark this level. If we can't break below here, it means that market is using what? Market is just using all these as a liquidity to grab more money and start going up. So that's what I saw. And what do I do? I decided to go to my 4H when market gets to this level because I understand that market is expected to get to this level. So now, since that time, first of all, I started trading 1 hour because when market got to this level, I went to 1 hour and I was trying to buy. I will have some profits, I will lose the money, have some profit, lose the money. But I now pay attention to it and now discover that 1 hour is not what the market is. Market is systematically respecting more of 4 hour structure. So that's when I go to 4H. 4H. So, and as you can see, that's when I switched to 4H, and from 4H I started looking for buying momentum up to now. So sorry, let my network load. So, so what happened? How I actually entered this trade was this. So immediately market mitigate this level, and I decided to start buying to the upside. So all I need to do is to look at this, look at this, look at this, and I see that this is the last pullback that the market did. So what am I supposed to do? I supposed to use this level as my first liquidity that the market will take out and do what, and and this will be a change of character for me because I'm looking for buy. So, and what I also do is to mark the structure. As you can see, mark the 4 hour structure to the downside for extra confirmation. So let's say we mark the 4H to this downside. As the market is coming down, you see market sweep this high, so you make this high to be valid. Use this high as an inducement, this level as an inducement, 4 hours inducement, and market breakdown. And you can see this is another break of structure that the market did. So, so this is the playbook that you have to follow. Once you understand where the higher directional bias is going, then it will be easy for you to take a trade in that same direction. So, so what I do next is mark my structure. I see that this is the extreme order block that the market is doing. This is the but it has been mitigated, so there's no other block. So and this serves like an inducement, but because market mitigate this level and I'm looking for buy, I use this level as change of character. So any other thing that I'm seeing here, I will just be looking for buy. And as you can see, market push up, give us this level as change of character, give us this level as change of character, and then do what? You can see market break up again. So once I see this market, because I was expecting market to come and mitigate this extreme before I will now start buying, but I see the market push up, and when the market push up, we had a break of structure from here. We had a break of structure from here. So, and as you can see, then we had an inducement. This is the last low that the market created. This will serve as our inducement, and immediately market got to this level and sweep this inducement, I was able to add a position from here and put my stop loss because I know this low must be protected, and what I did was to target this high. So I had about 1 to 3, 1 to 4 here. So I target this high because this is a what? This is break of structure. Remember, I'm not looking for sell. I'm only looking for buy. And the process continue. You look for this serve as your inducement, and this level, if you have a POI here, if it's valid, if it's not valid, then you allow it. You wait for market to come here. But when market got to this level, we don't have POI here, and market sweep this level again. When I see this sweep, I decided to take a chance and place another trade. Put my stop loss here. A bit remains small for market to take me and target 1 to 3. Remember, I always go for 1 to 3. If I'm greedy, I will have done this, but because I'm working on fixed RR, and you can see market did 1 to 3 for me, and I was expecting another one to continue, but what I know is market is coming to take out this high. How he's going to do that, I might not know, but based on structure, this high is supposed to be taken out. And you can see market keep forming internal structure, 4 hours internal structure. You can see market use this as inducement, mitigate this level, push up again, use this as inducement, come down, mitigate this level, push up again. That's how market continuously doing. These are internal structure that the market is. And once I see this, because these are major internal structure that the market has taken out for me, I knew that because I don't want to dabble into this. So all I do is to position for this low, and immediately I saw this um, external liquidity sweep, I know that I can take a chance again and then target this high. So, but I didn't target this high. I only target 1 to 3, 1 to 3. So you see, this is how the whole process. Sorry, hold on. So you can see this is how the whole process keep going because of just one thing. Because I understand the concept that where the market is going based on higher time frame POI. And look at it, based on higher time frame POI, I was able to have some decent trade. Though it wasn't easy before, because I have some loss trying to use 1 hour, and look at this, the process remained the same. Higher time frame, break of structure, this 4 hours break of structure. Remember, this is our low, this is our high, this is our low, and market swept this level. These are all internal structure created by 4 hours. Then this is the major 4 hours break of structure. So it means that this will serve as our low, and then this will serve as our high. And what does market do? Market creates an intense. This is the valid. You can use this as last inducement that the market created in 4 hours. And you can see if we were to look for our extreme, this is going to be our extreme. Then if we were to look for our decisional POI, you can see how nicely the market line up. This is the valid order block that lies between, and you see market try to invalidate it, but at the end of the day it hold, and you see market break this structure. So these are how the process will continue. So because I know what I'm looking for, I don't position for sell. Even if market give me sell, I'm not going to interfere with this. I'm not interested in sell. And this is another position for you. After break of structure, market get to this level. Sorry. After break of structure, after break of structure, markets give you inducement like this, 4 hours inducement. It's not that you're not going to lose, you're still likely to lose, but at least you will have a win because you're actually trading in the higher time frame direction. This supposed to be the no this value, this other block has been mitigated. So I'm not seeing valid other block below here. So in that case, I'll look for hidden POI. I supposed to have had a video on that hidden POI, something like this. But if you're taking a trade here, you should definitely know that your SL is not going to be inside the structure. Your SL is likely supposed to be here. So look at this, then you target this high of 1 to 3. But this high is the realistic one. And you see, market came back, boom. After giving you this, then you have a loss here. But after that, you remember this low is still valid because market only swept this low and this is your only high. Until market close below here, that's when you can say, okay, your change of character has happened. But look at this. We had a loss here. If you are lucky, maybe break even, but according to the trading plan, no break even. You see that TP or SL. It's only when market is nearly at your TP, then you are allowed to break even according to my game plan. So this now we have to reposition again because this is a sign that the market has grabbed the whole liquidity below here and market is ready to go up. So you can take a position from here, put your stop loss here, then you can now target this high. So I think I had a trade on this one, 1 to 3. So it was very, very dramatic. Look at it. Market is here and you are still back to your entry, then before the market now push up. So those are the things. Look at all this. These are drama. These are drama just because market is coming to this high. So if you don't factor this drama in, you will be emotionally depressed. You will be fucked up emotionally. You have to understand that because you execute trade, that doesn't mean the market will go up immediately like it happens here. Sometimes market consolidate, do its things. That's the work of the market, and you can see we had a break of structure here just because we know the direction that the market is actually going. And if you are to do that again, then probably we will have to look for valid pullback. This is valid, this is valid. Okay, we can use this as a valid pullback, which serve as our inducement, and maybe there is a gap here, which can serve as our decision that there is a gap. And I think I can see. Let me see if I have a valid pullback here. This valid pullback, yes, yes, a very small imbalance. I think, yes, it has a very small imbalance. If you want to check it, you can look at it this way. Let's look at it together. You can see. So this is a valid pullback and it has an imbalance here. So, so it's a valid order block for us. And you can see market sweep this other block and boom, and market start going up. So it's not that you're gonna have 100% win rate, but at least this will help you to know where you are trading to, where you are going to, and where you are coming from. So that's the essence of top-down analysis. You won't just be buying, selling randomly. So and the process continue. This will serve as our new low. I'm just doing the market structure mapping for us in that direction. This serve as our new low, and you can see systematically once you are able to understand where the market is going, maybe 2,000 pips, 3,000 pips, 1,000 pips ahead using higher time frame, in a whole year you can continuously trade in that direction because that's what is going to happen. So you don't need to be analyzing every day. This is going to be our extreme. Then this is going to be our decisional because it has fair value gap, and this is the other block that rests below our inducement. And you see, market responded to it and break our structure to the upside. So it's either we are positioning here and we miss this trade, depending on the where we want to take. For me, I prefer to take. I have a system that tell me exactly, and according to my system, looking at this is where I will be waiting for this market to come. But fortunately, I missed this trade. And what is going to happen? It means that this is our low because market has created another structure at the top. So, and sorry, and you can see when this happen, what are we supposed to look for? Look for inducement. This is our last pullback. This pullback is not because this high is protected. So this is our last pullback. Looking at it, this is our last pullback. If you think is this, these are inside bar, they are inside this one candle. So you can see this is what we have here. This is what we have here. This is the last pullback that the market created and push up. So it's expected that the market will come and take it. And that's exactly what happened. Immediately market sweep this low, then you can have this as your other block, extreme other block. And you see there's fair value gap in between. I think there is a gap, and that's what the market responded to. So according to my setup, I will be positioning for here. If I'm lucky, maybe I put it below here, but my stop loss is going to be here. And I will only target 1 to 3 or 1 to 2.5 in this case because the structure or 1 to 2 because the structure is not that big. So, and as you can see, I will have my win trade here, and this process continue. This break of structure again. It's very simple. It's not that difficult. You just need to have the right mind, right perspective, and look at this. This is going to be our new low. As you can see, this is going to be our new low. Where is our inducement? Our inducement will be here. This is our major inducement. Market created minor, but this is our major inducement, the last pullback that the market did after before breaking this structure. You can see this is the last pullback and market flash up. So it's very easy to know that market is coming back to this level or market will create another pullback. And if you were to look at it, this is the other block, but no fair value gap. So we can systematically look for, sorry, I think my network. Sorry about that. What's wrong with my network? Sorry, okay, sorry about that. So as you can see, the same thing happens. This is the last, and we know that the markets have to respect this low. So what are we supposed to do? First of all, looking at it clearly, this is the last sell momentum. This red, this black candle, and everything mitigated. But looking at this other flow, it's not mitigated. Yes. So this is what the market responded to, and you can see market got to this level, respond, then come back, then push, and this is what happened. We had break of structure again like this. So these are consolidation, these are internal structure, 4 hours internal structure inside the major structure. So this will be change of character if market pass below here. And now that we have break of structure, this is what the market is doing. We have to put our low here. This is our low. This is the big structure that the market created. And if we were to mark the current situation of this now, what are we supposed to look out for first? We're supposed to look out for our inducement. And as you can see, this is the last pullback that the market did. Our inducement and was our decisional POI. You can see this level. This is our decisional POI. Let me see. This is the candle. This no, this is not valid. This is not valid. This is going to be our decisional POI. Yeah, that's not valid. So, and this is going to be our extreme order block. So this extreme order block is what I will be positioning for. So in this situation now that we know that is other market come here, market come to this level. If this level fail, this is how it's easy. You can see markets will create an intent like this, probably do this, maybe like this, now fail. Once this level fail, Market is likely to use this level as a liquidity, mitigate this level, or probably come to this like this. Some people will think market want to buy, and you will now see market will now systematically come down to this level. So then after that, that's when you can now position for buy here and see what the market is doing. Then to this upside for the market to break this structure. So this is how I perceive my structure mapping, my trading plan, my playbook, everything. This is how I execute my trade. And as you can see, 4 hours structure is still intact. And as you can see, we keep marking it. So this actually works. You just need to have the right mindset, a good understanding. And this is the level that the market is finally coming to. It's high that market take out these inducements and respect this level and mitigate this level, then we can systematically start looking for change of lower time frame confirmation, because this is daily higher time frame POI. So if market give us a sign here to sell, then we'll start selling. Then if market does not give us change of character, then 24 hours, 24, then it means that we'll go to daily time frame. You can see this is our daily time frame structure. So if this fail, then it means that we had change of character and market will continue going to the upside, and our low will be shifted to this level and the process will continue. Maybe in daily time frame, maybe this level will be our inducement. After maybe market break above, then we look for our decisional POI and probably look for our extreme. Maybe market will now do this and continue. So that's just the perspective. And but currently, 4 hours time frame, 4H, 4 hours time frame, this is what we are looking at, and this is what I will be positioning for in the upcoming days or week. So whichever way I will I will be positioning. I will keep you guys posted. And if you have any question concerning to this regarding this video, you can drop it in the comment section, and I'll be glad to answer you. And look at this. When market mitigate this extreme, you can see we still have internal structure. You can see market still creates the internal structure. That's why a lot of people are confused. They don't understand what the major structure is, the internal structure is. Market use this low as an inducement, and you can see market keep pushing up, break internal structure. Market use this low as an inducement, come here, mitigate decisional POI, then you can see market keep going up. You see internal structure created, and boom, then you can see mitigate this level again, the market. So that's how it is. Major structure and internal structure will definitely be created. You just need to have the idea and understand what the market is actually doing. So this video is already long, and I would like to stop here. If you have any question, drop it again as I said, and I'll be glad to respond to your question. Thanks for now. Bye for